Welcome back. Welcome back. I am Q Rowling, your business growth coach and your money mentor. Y'all might want to get a hard money loan, but you have heard all the bad information about it. I'm here to tell you the truth. Stay tuned.
Make the money. Don't let it make you.
So lately, I've been hearing a lot of bad information about hard money loans. What they look like, what the terms may be, what it takes to be qualified, so forth and so on. So let's dispel all the myths and let's just get to it. First of all, a hard money loan is a loan that is for business owners who want to purchase a property, but they may not have all the cash to do the purchase plus a rehab. But this gives them the opportunity to buy the property and rehab it with the help of this hard money. The way that hard money works is that they look at the after repair value. What that means is that if you go in and say, hey, I need to borrow money for this house, it costs $100,000. If I put in $50,000, it's going to be worth $300,000. Then they may go ahead and give you the money. What that looks like is they may say, okay, well, what experience do you have? They oftentimes want to know, do you have any previous rehab experience? Typically, if you do, you get some points off of the interest rate. They may ask, are you a licensed contractor? Or do you have a licensed contractor? If you are a licensed contractor, that is a bonus. That also gives you points or easier approval. Now, if the house does not have an after repair value that is substantial, they may deny your loan. But oftentimes you've done the homework, so you know that the house is worth repairing and it will possibly sell for a greater profit. That is the whole point. If you are using a hard money to try to buy a house for you to move in, this is not the loan for that, because typically hard money loans have a standard term. That might mean a year, or sometimes it's a year and a half, and you may pay only interest-only payments, or you may make no payments at all. They just want all of their interest at the end and when you close that loan. At the end of a hard money, you have the option of selling the property, paying them their money back, and you pocketing the rest, or you can refinance out into another loan. But either way, you got to get out of that hard money in that term. Otherwise, you will be imposed some serious penalties and fees and blah, 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 up to them trying to confiscate that property. So I highly advise that if you have a term on a loan, that you are fully aware that you can complete the project within the time that they are allotting you to complete it. Otherwise, it may not be best for you to go into a hard money because it's just too many penalties and fees if you go over the term that has been allotted for you. So let's just talk about how this all works. Once you are approved, you will have to bring a certain amount of money to the table at closing. Now, they determine that based on loan to value that they are going to lend you. Hard Money's used to lend you 80%. Lately, they're around 74%. They aren't doing the big lending that they used to do, but they are still lending. So here's an example. Example is you buy a house, it costs $100,000. The rehab is going to be $50,000. They may say, okay, we'll pay for this, but you have to bring $50,000 to the table. You may say, oh my God, what is that doing? Because they're saying we aren't going to finance the whole project. We're going to make you finance the rehab, but we will do the loan and you will do draws off of the money that we lend to you. Basically, the money that you've given us, you're going to do draws from it. So once you begin doing your rehab, you start off by doing the rehab with your own funds. And based on the scope of work that you have given them at the beginning of your application, will you then contact them for an inspection to be reimbursed for completed projects within that property. So if your scope of work says, I'll just give you an example. If it says bathroom, $10,000, roof, $5,000, and you complete those two things, you can call them up and say, hey, I need a draw. But this is only after you've begun the work. They are not going to give you upfront money to start working. You have to have money also to begin working. Once you've called them and said, hey, I need you to come out and inspect, they will then ascertain whether or not the work that you have on your scope of work meets the requirement to give you the money back, to reimburse you. then they will give you that money, that $10,000 if you completed that bath, and that $5,000 that you said was for roof repairs. That's a total of $15,000. They will then release that to your bank account so you can continue doing the work on the property. So the very last draw is your final scope of work items. So that's how that works. So do note with Hard Money, with all the companies, they do charge a fee for every draw you make. They can be between $250, $300. It's whatever that company decides is what they're going to charge. So be mindful of not having too many draws, because if you have too many draws, you are digging into your profits with all of these fees just for having inspections. Because I do know, I've heard of people who constantly have draws because they just don't have the money. So every little thing that they complete, they're calling them up, wanting a draw so that they can get some money back. And after a while, it just begins to eat into your profits. So be very careful about doing that. Now, once you have completed all of this, that set amount of interest that they expect for you to pay will be due at time of you refinancing or selling that home. So just know that's how Hard Money works. It's not that difficult. I know somebody said to me, somebody told me it was only a 3-month term. Every Hard Money has its own terms. So it's important that you investigate different lenders. But I found a little cheat sheet. There's a cheat sheet of the 5 best Hard Money lenders on Forbes. I'll link it right here in the caption if you want to check it out. But some of them can literally close you in 3 days, 5 days. So if you are in a rush and want to get busy, there are lenders out there who are willing to give it up and do it right. So if you have any more questions about Hard Money, hey, leave me a question, comment in the caption. I hope this video helped you in some way. I really, really do. Hey, and in case you're wondering what happened to my hand, I had surgery on my hand just yesterday. So I'm still healing, but thank you if you have any well wishes. So I'll be fine shortly, but yeah, it's nothing too serious. But, just in case you were wondering, like, what the hell happened to her hand? She had surgery on her hand. Like I always say, go make the money, but don't let the money make you. I'll see you soon.